Activist investing a key to corporate accountability? Well, not quite. Today we're discussing how the evolution of activist investing may actually be reshaping the entire landscape of corporate governance and value creation.
Oh, that's an interesting take. What's driving this shift?
Well, it all starts with some big moves at Citadel, the quantitative trading powerhouse led by Ken Griffin. They've just made their second major hire from Elliott Management's activist team in London. Now, this might sound like just another case of talent movement, but it's actually signaling a potentially seismic shift in how the biggest players in finance approach corporate governance.
So what makes these particular hires so significant?
We're talking about Powell Suraj and Nabil Panji, two seasoned portfolio managers who were key players in some of Elliott's most prominent non-US activist campaigns. They were involved in high-profile situations at companies like SoftBank, Swedish Match, and Toshiba. These aren't just run-of-the-mill hires, they're bringing a wealth of experience in activist investing to a firm that's primarily known for its quantitative trading strategies.
That's quite a combination. How do you think this might change Citadel's approach to investing?
Well, that's the million-dollar question. What we're seeing here is a potential convergence of investment approaches. Imagine applying Citadel's sophisticated, data-driven approach to identifying activist opportunities. It could fundamentally change how activist targets are selected and how campaigns are executed. We're talking about a whole new level of precision and insight in activist investing.
So it's not just about adding another strategy to their toolkit, but potentially creating a new hybrid approach?
Exactly. And it's not just about the technology. These hires suggest a broader evolution in how major hedge funds think about value creation. Traditionally, activism often involved public campaigns, proxy fights, and sometimes confrontational approaches with management. But there's a growing recognition that what some call constructivist approaches can be equally or more effective.
Can you explain what you mean by constructivist approaches? That's not a term I'm familiar with in this context.
Of course, essentially, it's about working collaboratively with management teams while maintaining the leverage of activist capabilities. Instead of public battles, it's more about behind-the-scenes influence and cooperation. And Citadel's move into this space could signal a new era of more sophisticated, data-driven, constructivist activism.
That's fascinating. It sounds like we're seeing a shift from the more confrontational, headline-grabbing activism of the past to a more nuanced approach. But why is this happening now?
Well, it's important to consider the context. Traditional activism is facing new challenges. With markets more efficient than ever and activist strategies well known, finding genuine opportunities for value creation has become increasingly difficult. Citadel's entry into this space, with its technological sophistication and vast resources, could reshape how activist opportunities are identified and executed.
And when you say vast resources, just how much are we talking about?
To give you an idea, Citadel's flagship Wellington Fund gained 13.2% through November while managing $65 billion in assets. That's an enormous amount of financial firepower. When you combine that kind of financial strength with sophisticated activist capabilities, you're looking at a potentially formidable force in corporate governance.
That's truly impressive. How do you think this might change the landscape for other investors and companies?
It raises a lot of questions for market participants. It's not just about which companies might be targeted, but how this new approach to activism might change corporate behavior more broadly. Companies will need to be more proactive in identifying potential areas of vulnerability that an activist might target. This means constantly evaluating their business strategy, capital allocation, and corporate governance practices.
So essentially, they need to think like an activist investor?
In a way, yes, but it's more than that. They also need to be prepared for a more sophisticated, data-driven approach to activism. This might mean investing in their own data analytics capabilities to understand their business and shareholder base better. It could also mean being more proactive in their communication with shareholders, addressing potential concerns before they become issues that an activist could exploit.
Okay, Jeff, can we take a quick break so I can quickly mention your EdTech platform, Insight One? You've been in the media a fair bit over the last quarter, with column inches in The Entrepreneur, Global Banking, and Finance, as well as FinTech Finance. As many of you know, Jeff spent a chunk of his career as a Wall Street analyst. And yes, he was fortunate enough to be ranked #1 by Institutional Investor 10 times. But what really drives him in this venture is sharing this knowledge with investors like you. Insight One is where he brought together everything he's learned about markets and investing, combined with powerful technology to make it accessible and actionable. It's the same level of analysis he provided to major financial institutions throughout his career, now available right on your phone. If you've been enjoying the insights from this podcast and want to deepen your investment knowledge, Insight One is the next step. You can find us on the App Store, on Google Play, or on our website, theinvestmentanalyst.com. Make sure you grab the free 14-day trial to our top-tier Premium Plus subscription. Now let's get back to our discussion. It sounds like we're entering a new era of corporate governance. Do you think we'll see more large hedge funds developing activist capabilities?
I think that's very likely. What we're seeing with Citadel could be the early stages of a broader transformation in how large hedge funds approach corporate governance and value creation. The lines between quantitative trading, fundamental analysis, and activist investing are blurring, and this could create new opportunities and risks for market participants.
So what do you think the future of activism looks like in this new landscape?
I think we're moving towards a future where activism is less about public confrontations and more about sophisticated, data-driven approaches to identifying and unlocking value. We might see fewer headline-grabbing proxy fights and more behind-the-scenes influence, but make no mistake, this new breed of activism could be just as powerful, if not more so, in shaping corporate behavior.
That's an interesting point. Do you think this could actually lead to better outcomes for companies and shareholders?
It's certainly possible. In the best case scenario, this evolution could lead to more constructive relationships between investors and companies, resulting in better run businesses and higher returns for shareholders. But it's also likely to create new challenges. Companies will need to be more transparent and responsive to shareholder concerns than ever before.
And I suppose it's not just companies that need to adapt. How might this affect other investors?
You're absolutely right. This development has implications for all market participants. Traditional long-only investors might need to become more active in their approach to protect their interests. Other hedge funds might need to consider developing their own activist capabilities or finding ways to partner with activist investors. And of course, regulators will be watching closely to see how this evolution affects market dynamics and corporate governance.
It really does seem like we're witnessing a significant shift in the world of finance. Do you think we'll see more moves like this from other major hedge funds?
I think it's highly likely. Once a major player like Citadel makes a move like this, others are bound to take notice. We might see other quantitative focused funds looking to add activist capabilities, or traditional activist funds seeking to beef up their data analytics. The key will be finding the right balance and integration of these different approaches.
That makes sense. How do you think this might affect smaller investors, or even the average person who's not directly involved in finance?
That's an excellent question. While these changes might seem far removed from the average person, they can have broader implications. The way large investors interact with companies can influence everything from job creation to product development to environmental policies. If this new approach leads to more efficient and better run companies, it could potentially benefit consumers through improved products and services, or employees through better workplace policies.
So it's really a ripple effect that extends far beyond Wall Street?
Absolutely, and that's why we find these stories so fascinating on unlocking the upside. What might seem like an esoteric development in the financial world can have far-reaching effects on the broader economy and society. It's all interconnected.
Well, I think we've given our listeners a lot to think about. Any final thoughts on what to watch for as this story develops?
I think the key things to watch will be how Citadel integrates these new hires and capabilities into their existing strategies, will we see them launch any high-profile activist campaigns, or will their approach be more behind the scenes? Also, keep an eye on how other major hedge funds respond. Will we see a wave of similar hires or strategy shifts?
And I suppose we should also be watching how companies respond. Do you think we'll see changes in how they communicate with shareholders or manage their businesses?
Definitely. I expect we'll see companies becoming more proactive in their shareholder communications and more rigorous in their self-assessment. They might start adopting some of the analytical tools and approaches that activist investors use, essentially trying to see themselves through the eyes of a potential activist. We might also see changes in board composition, with more emphasis on directors who have experience with activist situations or expertise in data analytics.
It's really a fascinating time in the world of finance and corporate governance. Is there anything else our listeners should be aware of as they follow this story?
One thing to keep in mind is that this trend isn't happening in isolation. It's part of a broader shift in how we think about corporate purpose and stakeholder value. There's increasing pressure on companies to consider a wider range of stakeholders beyond just shareholders, employees, customers, communities, and the environment. It will be interesting to see how this new breed of data-driven activism interacts with these broader trends in corporate governance.
That's a great point. It seems like there are a lot of moving parts to this story.
Absolutely, and that's what makes it so fascinating to follow. We're not just talking about a couple of high-profile hires or a new strategy at one hedge fund. We're potentially seeing the early stages of a fundamental shift in how large investors interact with companies, and by extension, how companies are run. It's a story that touches on technology, finance, corporate governance, and even broader questions about the role of corporations in society.
Well, I think we've given our listeners plenty to chew on. Any final words of advice for those who want to stay informed on this topic?
I'd encourage our listeners to look beyond the headlines. When you see news about activist campaigns or changes at big hedge funds, think about the broader implications. How might this affect corporate behavior? What does it mean for other investors? And how could it ultimately impact employees, consumers, and communities? By asking these questions, you'll gain a deeper understanding of how these financial developments connect to the broader economy and society.
That's great advice. Well, I think that wraps up our discussion for today. Thanks for joining us on Unlocking the Upside, where we dive deep into the stories that shape our world.
Indeed, thank you all for listening. Remember, in the world of finance and beyond, everything is connected. Keep questioning, keep analyzing, and keep exploring the world around you. Until next time, this is Unlocking the Upside, signing off.